Hello and welcome to the World Built Environment Forum webinar. My name is Simon Rubinsohn and I will be moderating today's webinar. As you know, we will be focusing on the current state of housing markets both in the UK and mainland Europe, and looking to see how some of the big challenges facing the sector can best be addressed. I would like to start by introducing the panel and asking them to say a few words about themselves. So let me start with David Fell from Hamptons. Welcome, David.
Thanks, Simon. Hi there. Yeah, my name's David. I currently work as an analyst for Hamptons, and my background is I've worked for a couple of house builders underwriting values.
Thank you, David. Next panelist I want to introduce is Oliver Knight from Knight Frank. Welcome, Oliver.
Thanks, Simon. As Simon says, my name is Oliver. I head up our residential development research team at Knight Frank. I've been here for 12 years, working closely with the house building sector.
Thank you. Next up, Roman Heidrich, MRICS from JLL in Germany. Now, I think we've got a few problems with the camera still, Roman, but I'm looking forward to you participating all the same. So could you just say a little bit about yourself?
Yes, sure. Yeah, my name is Roman. Since yesterday, I'm with JLL in Germany for 19 years now, and I'm responsible for residential valuations in Germany.
Okay, thank you very much, Roman. And we will obviously see if we can get that camera to work over the course of the next hour. It's a bit, unfortunate, but we'll do our best on that. Next panelist is Ingrid Neugebauer, and she's MRICS as well from EHL Wohnen in Austria. Good morning, Ingrid.
Hello, good morning, everybody. Hello. I'm with EHL since 6 years now, right? Well, since 3 years I have the privilege to lead the rental and the condominium divisions here within EHL with an amazing team. Yes. And I'm looking
Thank you very much, Ingrid. Thank you, Ingrid. I'm looking forward to hearing your thoughts. And the last panelist I want to introduce today is Sander Burgers from ING in the Netherlands. Good morning, Sander.
Hi, thank you, Simon. Good morning. Yeah, so I'm Sander Burgers, housing market economist in the Netherlands. And what I do, I conduct economic analysis about the housing market and share those with colleagues, so the business, our clients, and I speak to the press as well about housing market developments.
Okay, well, thank you very much, Sander, for that, and looking forward to hearing your thoughts as well. I'm really keen that despite having what is quite a big panel today, to make this session as interactive as possible. So I really would like this audience here, and we do have sign-ups of over 300, so it could be a large audience of attendees, but we would really like to get your thoughts as we go through the discussion. If you have any questions, you can please put them in the chat function, and also if you just have some thoughts, we're interested in that, and responses to some of the comments from the panelists. So please do get involved as we go through, and I will be reminding you of the opportunity to contribute to the discussion as we go through the conversation. And I will obviously aim to pick up as many of these questions as we can through the next hour. If we can't, we will try and get back to you after the discussion today with some thoughts about any of the questions that you raised. Let me now start. There's some background, apologies for any background noise there. Let me start by getting the first question, getting an impression of the current dynamics and trends shaping housing markets across Europe. So let's just run through what each of the panelists have to say about what they're seeing in terms of the background to the housing market, both sales and rental markets and development for that matter in their area. So Roman, can I start with you and get some thoughts on what's happening in Germany?
Yes, of course. Yeah, but because I'm based in Berlin, so I would give a brief overview of what's happened in Berlin, because it's what happened in Berlin is more or less the same what we see overall in Germany, in the big cities and in the strong economic region. So maybe you heard of it. Berlin, the housing market can be described as tight, so to say. And just to drop a few numbers, Berlin is around 2 million apartments, and of these around 82% are rental apartments, and around 15% are owner occupied. So it's a quite low number of owner occupied apartments. And when you compare this with the German number, the ownership rate in Germany is 44%. So it's not only the half of the ownership rate in Berlin. I think it's most of the reasons is historically driven because of the split up of the city for a certain number of years. And in East Germany, home ownership was not really usual, so to say. Coming back to Berlin, the vacancy rate is quite low. We have around 2% vacancy rate, and when you look at the actively marketed vacancy rate, this is even lower. It stands at 1.3%. So this means it's less than the normal fluctuation level at the vacancy rate. And this the problems of Berlin housing market is also reflected in difference between actual rents or existing rents shown in the rent index which we have in Berlin in place, and the rents for new contracts. So just to give you the number, the rent index in average in Berlin stands at €7.21 per square meter per month, how we calculate it in Germany, and the rent for new contracts are almost €13 per square meter per month. So it's it's almost a double what you have to pay when you're looking for a new apartment than for what you pay when you are in the apartment. And rents for newly built apartments are significantly higher. So as I said, for an existing tenant, moving into a new apartment is often not economically feasible. And people who are coming new to the city, which are quite a lot, and they have difficulties to find an apartment, especially for a reasonable rent. So that's more or less a brief overview. The market is really tight. It's a lot of problems for especially for people who are coming new to the city.
Thank you, Roman, for that. And it's interesting, this tiering of rents, which often can be a challenge where you have some sort of controlling on rents. Ingrid, given that we're talking about sort of the Berlin sort of dimension, I mean, how are things shaping up in Vienna?
Mm-hmm. Well, Austria is a smaller country than Germany, so we have one main city where we have one, let's say, main real estate market, which is Vienna still. Traditionally, all over Austria, the most popular housing forms are single home ownerships, and mainly in home ownerships. In Vienna, it is quite the opposite side. In Vienna, we see the renting is the predominant form of tenure, with a 77% share of the total housing forms, of the stock of all housing forms, which is really amazing. Mainly also to historic reasons. When we are on the rental market here in Vienna, we really see that the demand of renting apartments currently has stabilized at a particular high level currently. We see an increase of about 60% compared to 2022. This was the pre-interest rate hike. And at the same time, we see a new supply shrinking by -40%, which really stressed the rents and stressed the prices. Currently, our rents are increasing higher than the interest rate, than the inflation rate, I'm sorry, which is really enormous. The leasing time, so the duration until the apartment is rented, is very short, only some days currently, which makes the tenants to make quicker decisions and really to chase for the best apartments currently in Vienna.
Can I just ask a quick question there, Ingrid? I mean, is there a difference in the rent between those who are existing tenants and those looking a bit like, new tenants, a bit like what Roman said? Is there that differential in terms of rent levels in Vienna?
Well, usually, yes, as old lease agreements are a bit cheaper. Yeah, and currently, yeah, this curve is going up now because we see that new rents are especially higher than the older rents. So if we can, when we can get back an apartment and we say, okay, we bring it in the market, we are not able to put on a usual VAT rate. We are able to put on more than that due to the market currently.
Okay,
which really
thank you.
dramatic inflation at the end. Yeah, because the rents are each year, growing, and the question is, with a stable income, how will it be afforded in the longer time period?
Okay. Yeah, no, absolutely. Great. Thank you. Well, before turning to the UK, can I get the Dutch experience, and then we'll put the UK in the context of what we've heard from three panelists from mainland Europe. So Sander, please.
Yeah, sure. So I would say there are some similarities in terms of the tightness of the market. So in the Netherlands, there is a major housing shortage as well. It's being estimated at 400,000 of homes are short, and that's approximately 5% of the housing stock. So there is a major housing shortage, and that is kind of affecting all segments, right? So in the housing corporations, housing associations segment, which is mainly rented out on a social basis, that segment consists of, that is taking up 30% in the Netherlands. You're lucky if you're in, because rents are controlled there and relatively low. But you need an income below a certain threshold in that segment, and because it's very difficult to access, the waiting list is now approximately 10 years. So let's say the social segment owned by housing associations is very difficult to access. If you look at owner-occupied segments, that consists of around 55% of the market in the Netherlands. Also very tight. So limited amount of homes for sale. And we see very strong house price growth there in the last years, but actually also for a decade. So also owner-occupied. So to purchase a home, you require a salary which is double or sometimes triple the modal income in the Netherlands. And private rental in the Netherlands, 15%. So relatively small private rental segments, difficult to access as well. Rents are relatively high and take up, especially for young people, sometimes up to 50% of their income. So in all segments, there are slightly different problems, but they're all difficult to access if you're an outsider. So we could describe it as an insider-outsider problem, right? If you're in a controlled rent, or if you are in an owner-occupied homes and you've seen your home value being doubled or being tripled, or doubled, I should say, in the last decades, yeah, then you're lucky to be in. But if you're out, it's very difficult to access, regardless whether it's a social house, a private rental home, or an owner-occupied home. So.
Okay, well, thank you for that, Sander. And I'm always struck by just the sort of the commonality, because I think in the past one often thought that the UK market was very different from a lot of European markets. But when I listen to, I know the tenure structure may be different, but when I listen to the issues, I'm struck by how similar these sort of challenges are. So look, David, first David and then Oliver, can I just get some thoughts from the UK?
Yeah, I agree, Simon. I think there's really strong similarities right across Europe. I think just to pull out kind of three things from the UK at the minute. I think the last general election was kind of fought with both parties sort of promising to try and increase house building, which has just been something that's been quite difficult, I think, certainly over COVID. And I think the new government has increased the target, so they're looking to build 370,000 homes per year over this parliament. I think, to be honest, I think that's going to be a stretch. I think I don't think, to be honest, we're going to come anywhere close to that number. And I think successive governments have struggled to get house building numbers up to the levels that are required. I think we've seen certainly younger people, and I'm sure it's very similar across Europe, have struggled to buy. I think there is still in the UK, home ownership rates have fallen, but I think there is still an aspiration to buy longer term. I think home ownership rates peaked probably sort of 2006, 2007, and certainly younger people have struggled to buy their first home. I think the falls have probably tailed off slightly, and the levels have stabilized, but they've stabilized at a level below where it used to be. And I think the third point I'd like to make is we've seen very similar amounts of rental growth, perhaps to Europe. We put rents up 35% versus where they were pre-COVID, so in 2019. But despite this amount of rental growth, we haven't really seen an appetite among investors, and actually a lot of them are kind of sitting on their hands. Rents have increased, but also so have their costs, and in particular their mortgage costs.
Yeah, no, thank you. No, I mean, it's difficult to disagree with that. That's a very clear statement of what's going on in the UK. Oliver, your thoughts?
Yeah, I mean, I'd probably just echo what David has said. I think there's a quite a big affordability crisis in some parts of the UK at the moment because of that growth that we've seen both in house prices over the last decade, but also what we've seen in terms of rents more recently. What I would also point out that while we've seen a bit of a decline in terms of those individual private landlords in the UK, so I mean they make up about 98% of private rental supply in the UK at the moment, and as David says, a lot of them are kind of sitting on their hands a little bit in terms of investing more. One thing we have seen over the last couple of years is a lot more interest from institutions to come into that market and to kind of plug that gap. So build to rent, multifamily development, as it's probably better known across the continent, is something that we have seen huge growth in the UK market over the last couple of years, but it's not happening at an extent that's going to plug the kind of supply shortfalls that we've been seeing. I mean, I'd probably also just say in terms of current market dynamics, David mentioned it, but spikes in mortgage costs have kind of changed affordability calculations on the kind of home ownership side as well, and that has ultimately translated from a supply perspective into a bit of a fall in volumes. So house builders and developers have kind of reacted to those conditions by cutting back on what they're building and what they intend to build, and also on plans for how many homes they're kind of putting in to get consents for. And that ultimately means that those kind of supply constrained market that we're seeing in the UK, and we have seen over the last couple of years, this idea that we are not building enough homes to keep up with demand is something that's kind of entrenched, and is a structural issue that we see that's not going to change regardless of government policy and government targets going forward.
And just to add on the UK, and I think it's, in the light of the comments that were made about Europe, I think it's fair to say as well that the sub-market area, particularly the genuine, and we'll come on to this, but you might cast it as socially rented homes, there's a pretty significant shortfall in that area as well. And we'll come on to perhaps how that can be tackled, alongside some of the other tenures where there are big challenges.
Yeah, I mean, it's worth saying on that, Simon, the socially rented sector, when you look at the makeup of tenure in the UK, back in the 70s, it used to make up about 30% of all households. It's probably hovering at around 16% now. And you've got about 1.3 million people across the UK on social housing waiting lists. And that in itself is also, I mean, effectively what you've seen is a lot of those households being pushed into the private rented sector, which has kind of doubled in size over that time. So yeah, it's a big issue.
Okay, thank you. Right, can I just remind the audience, because we're ticking up on numbers here, but I haven't seen any sort of questions come through yet, so we're really eager to, as I say, make this interactive, get your participation. Please don't be shy, get those questions or comments in. what I want to turn to now, I suppose, is just that shift in the macro dynamics and whether that's going to perhaps pave the way for a slight increase in supply. I mean, we've heard about higher mortgage rates being a bit of a drag on the supply in the UK from the comments I think just then from David and Oliver. Let's perhaps start with Germany again, Roman, just to get a feel for, you talk about Berlin and the tight market there. With interest rates, with the ECB beginning to cut rates, is there any sign that, developers are beginning to respond to this? And is it, and I'm going to actually merge a couple of questions here, because I'm thinking, is the macro environment critical to getting house building going, or is it a sort of an issue around land supply? Is it an issue around external financing? What is the big challenge? Are there any signs that the situation is going to soften? What is going to sort of get that sort of development around Berlin going? Any thoughts, Roman?
Yeah, to answer your last question first, so there are no good signs at the moment in the market, either in Germany or in Berlin itself. So just to drop another some numbers, Berlin needs around 25,000 new apartments per year. In the peak in 2019, however, only 19,000 apartments were built. This was and also during the low interest rate period, not enough new apartments were being built. So, and in last year, not even 16,000 new apartments have been built. So therefore, it's and that's the same situation in Germany. The government goals are 400,000 new apartments per year, and I think we will end up this year around 250,000 or less. So the overall impression is not really good, because we also see still decline in building permissions, and this is not a good sign, so to say, for the next year. And there are many reasons for the low level of new construction. So it's for sure the huge increase in the interest rate which we have seen in the last 2 years. But we also have lack of availability of building plots, especially in the big cities. We have long planning periods for project developers. We have, I think that's not only a German issue. We have labor and material bottlenecks on construction sites. This is getting better and better, but it's still an issue, and the huge increase on the financing costs in the last 2 years, and this has led an enormous number of project developers went bankrupt in the last 2 years. So, and this also creates a problem for new constructions in the next couple of years. So to be honest, this is the outlook for this year, for next year, and I think the year after is not really good from a tenant perspective.
I mean, not an encouraging outlook, as you say. I mean, to what extent, and I'm thinking about Berlin here, I know there's been a lot of discussion about, rent controls and indeed, ownership of properties in Berlin. To what extent is that discouraging investors in the marketplace?
Yeah, this is an additional factor that investors are more cautious because of the rent regulation, especially in Berlin, which we had with the rental cap, rental cap thing some years ago, which was denied by the Federal Constitutional Court, and so those kind of political regulations are frightening investors to invest in, especially in rental housing.
Yeah, thank you. I mean, Oliver, I don't know, just thinking about the UK discussion, because the idea of controls over rents, is a debating point. I don't think anyone's pushing aggressively now for that, but there has been a point of discussion. I mean, how do you see that, in terms of the European context?
Yeah, it's interesting because I mean I mentioned the growth of the build to rent sector that we've seen, and obviously that institutional capital which is coming in, and the prospect of rent controls is something that investors are definitely wary of, and landlords to that extent as well. We've seen a case study in Scotland fairly recently where the SNP introduced rent controls, and it all but killed the kind of growth of the sector there. A lot of investors that we spoke to who were planning to invest or had been investing in Scotland pretty much overnight decided, well, actually, the market in England looks a lot more favourable. I think the problem, one of the big problems, is that investors like certainty, and what happened in Scotland, and I suppose to an extent what's happening in some markets in continental Europe, is the kind of those almost knee-jerk reactions to pretty high rental growth, and that's what puts a lot of investors off. The idea that you can wake up one day and suddenly you've got a rent freeze in place for the next 12 months. Now, that's not to say that rent controls in and of themselves are a bad thing. There's plenty of examples of markets that have rent controls and function quite well. It's just that they are few and far between. The reality is that if you want to bring down rents, you kind of have to do one of two things. You either have to decrease supply, or you either have to increase supply, or you have to decrease demand. And putting in place rent controls does the opposite of both. It decreases supply because people get a little bit fearful and nervous about going into the market, and it increases demand because people are much happier to be renting and renting for longer, and it doesn't, you end up with a lot less churn in that market as well.
I noticed that Greystar recently said that they were sort of not wholly against what they were, but I don't think it was rent increase caps, wasn't it, really, rather than rent controls? And I think that's a very different proposition.
Yeah, and ultimately, like I said, investors like certainty, and if that certainty is you can increase rents by CPI or RPI plus 1% a year, then they can plan for that, and that's all that I think investors are kind of asking for. I think the issues arise when there's a lot of new regulation which has come out in the last couple of years around building regs, fire safety. Then you've got talk of rent caps and rent controls, affordable housing. That's another it's another constraint on the market in terms of what can be delivered within the constraints of viability. So there's a lot of things for investors and house builders to kind of unpack at the moment, and just layering on more to it doesn't help when it comes to them thinking about increasing supply.
Thank you. Yeah, that's interesting. I'm going to come back to the rental market in the UK in a bit because we've had a number of questions coming in about this, but I just want to go back to this supply issue. Go back in Europe first of all. Ingrid, I don't know if you want to talk about this, but just in terms of what's happening in, whether it's the Viennese market or more generally in Austria, what is going to sort of help that market to get a bit more supply coming through? Because you've talked about the problem. I mean, can you see anything changing, or does this interest rate cut pretty meaningless in the context of what the challenges that developers, builders are facing?
Yeah, right. Well, I think we see a pretty similar situation to Germany, as we have heard now from Berlin, for example. We see a very sharp declining new supply. Yeah, well, it is about 50 to 60%, which is really enormous. So the developers nearly can start new projects, and face the construction, can start the construction phases now. And we see a shift from rental products into condominium, as the investors, the big investors, are currently not that active as they had been as before. So the developer has a finished product or almost finished product, and then he decides in course of a lack demand, to go into single sale, which means it gets into condominium. So we see that kind of shift here. well, asking our clients, the developer, what are the reasons why or what would help? Yeah, out of that are really the regulatory barriers that might be really high in Austria. We have local zoning laws and regulations. They are quite strictly. We need to build in a extremely high quality compared to international standards, which is extremely expensive. On top, well, it is also a part of concentration in urban regions, as we have a focus on a high demand in the urban regions, like in Vienna here in Austria. It means also the resources can be concentrated here. This is a local zoning issue. Yeah, so that would leaving other regions with a lower pressure of investments, yeah, of infrastructure, of everything what would be need. And maybe then the countryside stays calm as it should be also in future times. So we really try to push on more in the city side and not into the countryside, the money. Well, yes.
Well, that's an interesting topic, because that is very live again in the UK as well.
It is.
Yeah. Yeah, I mean, David, I mean, in terms of the, I mean, just, I don't know if you want to touch on this, and I don't want to get political here, but I mean, just thinking the new government has talked about, listening to Ingrid about the zoning system, zoning law, so thinking about planning and thinking about, grey belt, which is, beginning to look at sort of perhaps scrubby bits of the green belt. I mean, what do you think? I mean, is this going to be a successful way? I mean, is planning reform in the UK actually going to get any traction? We've been through it so many times in recent years.
Yeah, no, we certainly have. And I think various governments have kind of come out with various initiatives on the planning side of things. We've certainly had, I think, permitted development rights, which actually I think gained quite a lot of traction, sort of probably about 10 years ago now, where you could kind of turn office blocks into homes without kind of needing full planning permission. So it was a much more sort of faster, streamlined system, and I think that did deliver a reasonable amount of homes, some of which were of variable quality, I would say. I certainly think, though, short term, it's probably interest rates which are the bigger barrier to delivery, and I completely accept. I think, over a sort of 5 or 10 year period is absolutely, the planning is a barrier, and we constantly hear it from house builders how long decisions take and how expensive it is to get planning, particularly for some of the smaller house builders who perhaps don't have a kind of dedicated in-house team. And actually, if you're building sort of 10 homes, you're jumping through a very similar number of hoops as if you're building 100 homes, and there is a big burden placed on house builders. But I think short term, actually, it's interest rates which have kind of really hindered affordability, and it's where we've seen kind of new starts down sort of 40 to 50%, on where we were, and planning hasn't got 40 or 50% more difficult over the last 18 months, and I think it's really a house builder reaction to kind of the sort of slowdown in the sales market.
Yeah, thank you. I mean, Sander, I want you to say a few words about supply, but I also want to move on to the next question, so you can lead on this one, because one of the questions that came in, and I think this is interesting to understand, it's about government protection of tenants. Do countries in Europe experience this, and what impact does it have on landlords and supply of rental stock? So could you first say a little bit about more general supply of properties? Where are we in the cycle? Are lower interest rates going to help address the problem you've already talked about? But then also, I'm just interested, and I wouldn't mind getting, then Roman and Ingrid's comments on this as well, because it's a source of discussion at the moment in the UK about sort of, the whole regime around tenant protection.
Yeah, all right. So to start with, supply. So demand has been exceeding supply for the last couple of decades in the Netherlands as well. So And in the Netherlands, we have a very low elasticity of supply, right? So new constructions respond very weakly to an increase of prices, and yeah, that's actually a couple of it's a very challenging problem. So let's call it a wicked problem, or in the Netherlands we often speak of a multi-headed monster. So yeah, one of the bottleneck is indeed decreasing investment appetite because of higher building costs, because of higher materials as a result of the energy crisis and strong inflation in 2022. Also higher financing costs, of course, of higher interest rates. So the investment appetite has been decreasing, but at the same time, yeah, the rules and regulation to add new building stock is very complicated in the Netherlands. Spatial planning is very strict. There are a lot of demanding requirements to build new homes regarding energy efficiency, safety. Also now water management and soil management have been high on the agenda because, of course, the Netherlands is lies very low, below sea level major parts. So we always have the risk of floods, of rivers and other water bodies. So now water management and soil are major requirements, but of course that slows down the procedures as well. And so now it takes approximately 8 to 10 years to build a new home. So very long procedures because of this strict spatial planning. Also, there's the shortage of staff at municipalities. So the broader macro labor shortage is now hitting municipalities as well. So it's very complicated to add more building stock in the Netherlands. And indeed now rent regulations have been implemented in July 1st this year, and it has already been announced 2 years ago. And of course, yeah, as what Oliver said, so rent controls in the short term, they increase demand, right? Because who doesn't want to live for a controlled rent in the city center of Amsterdam, you know? Now you probably need 3 people, 3 students to be able to pay up the rent. But if that's going to be controlled, someone could say like, hey, an expat, why would I not live here on my own? So it might even create more demand. And for the supply side, of course, controlling rents make the whole business case of adding new housing stock less attractive. So for investing in new homes, yeah, it's create an additional bottleneck, you could say. It makes it less attractive. And what we do see as well is that now for existing homes, we see a shift from rental properties to owner-occupied properties. So because in existing homes, investors are now increasingly selling their rental homes because of a combination of measures. So higher fiscal taxes on owning a rental home, regulation of rents. So that suppressed the returns of rental homes, and now a lot of investors decided to sell the rental homes as soon as the tenant leaves. So we now see a wave coming of a shift of rental homes moving to owner-occupied, and that's a big debate as well whether that's desirable, because you could argue that rental homes and the rental segment is required, right? A certain amount of rental homes, but if they are being bought instead of first-time home buyers, and then the investors, of course, are accumulating capital, and you could argue you would like the first-time buyers to be in place to purchase those homes, because otherwise it will further increase wealth inequality. So
let's ask: is this sale? Is this by professional sort of landlords, or is it almost by sort of individuals who are selling their rental
combination
properties?
First, we were expecting it were only the individuals, but now also the institutional investing are getting rid of those rental homes. And yeah, as said, that's a combination of high transfer tax, unfortunate or unfavorable fiscal regimes, rent controls being implemented, and at the same time, of course, higher interest rates, which simply make other investments more appealing. So yeah, they're selling their homes, and luckily, the positive side is, of course, that they are typically in the lower segment of cities. So now first-time buyers are getting more chances to purchase those homes, and we see the amount of homes being purchased by 35 years and younger being increasing as well. So it's a trade-off, right? So there are positive sides.
But having a good stock of rental property is also important. It's not just about owner occupation, isn't it?
That's true. So yeah.
Roman, I mean, just listening to Sander's comments, I mean, you know, what are you seeing any of that in Berlin?
Yeah, in general, German tenants are very well protected by legal regulation. So we have very strict rent regulation in place, especially in the big cities with tight housing markets. We have the rental break, which allows that you only can rent out when you have a rent index. You're only allowed to increase 10% above the rent index, unless you invest a lot of money in the apartment, or at least 1/3 of investment in the which you need to build a new apartment or new apartment block, so which is quite a lot. Then you can get out of the rental break, but this is only affordable in the bigger cities where you can increase the rents a lot. So, but we definitely also seen what Sander mentioned, that investors, private or institutional investors, are selling their apartments, and they get vacant to owner occupiers as an option, especially in the big cities, because it's so the privatization. It's also restricted in Berlin in some protected areas. It's getting difficult to get an approval by the public authorities when you want to split up your apartment block into condos, and then in protected areas it's difficult, but it's not impossible. But it takes time. But that's what we see from a lot of investors to avoid further rent regulation.
Yeah. And Ingrid, I mean, are you seeing sales of, I mean, is there sales going on of rental property because of the regulation? I mean, is it too tight, or is it different in Vienna?
Well, yeah. Well, yes, in Vienna and in Austria generally, we are the heroes of subsidizing housing, I think. We love it. We love it. Also, our political everything is keen on. Yeah. And I think it works because our housing costs are among the lowest within Europe, I think. Yeah. And the Austrians really need to learn that they need to spend a higher share of their income for housing times. So this is the part of our rent caps. Additionally to that, we face almost every 3 or 5 years new rent caps. Yeah, outside of the subsidized housings. We have, for example, this year a new rent cap, which means that we can have a maximum take up of 5% of the rents. This is all within the regulatory rent basis. And this is really, it is quite difficult because when the rents does not increase in a special amount, then we cannot spend the money back into the houses, and we have a quite huge stock, and we have a Green Deal. We have in Vienna, we are still on gas, which is still a really big topic. And the question is, we see that the investments into the building stock, will decrease when the rents will not increase in the higher side, where we can really work it out economically. But on the other side, the other one, the subsidized, which is this limited profit housing associations, they are so good in Austria. They are so good financed and supported. They deliver even a better quality on the construction side than some privates maybe do. Yeah, which is amazing. But basically, we have a very high quality to fulfill due to our regulation.
Yeah, I mean, I suppose that some of that's changing in the UK with the regulations and the focus, I mean, on quality. Perhaps some of that is inevitable after some of the problems that we've had here. I actually was on the board of a big housing association for quite a long period of time, chairing development committee, and I what I saw towards the end of that period was a lot of money having to be invested in stock that had been built over preceding years, just because the quality was not of the standard required. So it's clearly an ongoing issue here. And I mean, just to get David first and then Oliver, your comments on the rental market and indeed some of the changes that are being pushed through. What does that mean in terms of, I mean, you've talked about the build to rent and you've sort of implied that there is interest there. I mean, is it enough? Is it coming through fast enough? You know, given that perhaps private landlords are becoming a little less enchanted with the market because of the changing regime. David, do you want to start that one?
Yeah, I think it's an interesting one, Simon. And I think just to kind of come back on the sort of maybe where some of this pressure for rental control or kind of sort of the standards and protections for tenants, and I think it kind of it stems from the point that actually who tenants are has changed over sort of 20 years. And I think you alluded to the point, Oliver, that actually a lot of the people who are now in the private rented sector, perhaps 20 years ago, may well have been in a kind of council house or a socially rented property. And actually the private rented sector, you know, it's not students and sort of young professionals in their sort of 20s and 30s. You've actually got, you know, an increasing proportion of people who are in their 40s, 50s with kids who need stability. You know, their kid goes to the local school, and actually perhaps the private rented sector in its shape or how it was kind of formed 20, 30 years ago isn't necessarily designed to cater for their needs. And I think there's an inherent tension there, because kind of so again, what you've seen in Scotland is, you know, rules have been changed quite quickly, whereas, you know, when someone's investing in a building, they're looking at a sort of 25, 30, 40, 50 year sort of, you know, lifespan of a building and an investment period. And actually, I think if someone comes, you know, halfway through that period and says we're going to change the rules, actually it makes sort of certainty and the viability for investors quite problematic.
Yeah. Oliver, any thoughts?
Yeah, I mean, just in terms of that supply point, we often talk about there's two separate charts that we often show when we talk about that. The first looks at listings data, and that kind of tells us that actually in terms of available supply, like what's on the market, that figure, when we look at, you know, number of unique listings so far this year, is about 40% lower than where we were back in 2017. So we've seen a huge reduction in terms of available supply across the rental market. The other chart we show, Simon, which you'll be well familiar with, is the RICS monthly market survey, which kind of just showing the balance of demand between landlord instructions and new tenant demand. And there's been a big imbalance between the two of them for quite some time, in terms of tenant demand being far stronger than the number of new landlord instructions that estate agents across the country are seeing coming on. I mentioned the build to rent sector, and yes, we are seeing more and more investment coming in via that route, via the institutions. Pension funds, as David says, have a pretty long-term view in terms of their hold periods in the market. But you know, the reality is it's not coming quick enough to kind of make up for the reduction in supply or the shortfall in supply that we're seeing. So if you look since 2016, we've actually tracked about 500,000 mortgage redemptions from individual private buy-to-let landlords in the rental markets. That's about 500,000 landlords who have sold up over the last kind of 8 years alone. Now, some new ones have come in, but you know, it's a huge number that ultimately, when you're talking about build to rent supply and institutional supply, is running in a good year at about 14,000 new homes. I mean, it's the disparity between the two of them is huge, and you know, the reality is that you know, that's not going to be something which is addressed anytime soon. In terms of available build to rent supply across the UK, you're talking about 119,000 households. The private rented sector is about 5.7 million households, so it's less than 2% in terms of the actual penetration rate from those institutions for the whole private rented sector. So yes, it's important. It's going to become more important, but it's not the kind of silver bullet that is going to solve the issues that we have in the rental market immediately.
Okay, thank you. Yes, and I I concur with those thoughts. Really, I mean, it's a small part. I suppose the good news is that they're not being perhaps wholly put off by some of the changes that are taking place at the moment.
No, but one thing we have seen, which is a really interesting shift, is just a shift in terms of what they are buying. So historically, you know, when it comes to those institutions, they've bought apartment blocks, they've funded apartment blocks, you know, big, you know, 200, 300, 400 unit blocks in city centres. What we've seen, especially recently, given the kind of weakness of the sales market, is a real pivot in terms of strategies, and a lot of them are now working a lot more closely with house builders and delivering houses for rent in more regional markets, and that's something that's a really interesting shift that we've seen. So and something that we think is going to continue, because from a house builder perspective, taking a kind of multi-pronged approach and not putting all of your eggs in the kind of build to sell basket, which they have done historically, and the outcome of that has been that they've had to reduce sales, had to reduce completion volumes and new starts and everything, because the end user demand isn't there. By taking a multi-pronged approach and speaking to those investors as well, it means you can keep supply kind of coming through, which is why we think a kind of a multi-tenure approach to housing delivery is something that has to be, you know, considered from a policy perspective going forward, if you want to get supply to anywhere near where the government wants it to be.
Reminds me of the Letwin review. I think that's where he was. Yeah, absolutely. Right, look, we've got lots of questions, and I'm going to try and fire through some of them. The first one's a little bit controversial, so don't feel you've got to answer it. If you do want to answer it, please put your hand up and go ahead. So the first question we got was, does immigration play a role in the deterioration of the housing market? The only thing I would add is that RICS runs a quarterly construction monitor, and we ask about skill shortages. And the response we get across Europe, and indeed across almost all the countries that we monitor across the globe, is that there are significant skill shortages. And even in the face of what has been a downturn in activity, they are still quite prevalent. So yeah, we're not building as much, but we still have problems finding the right skills to do the development. And in fact, in the latest survey, we're asking questions about the extent to which companies are looking overseas to try and attract labour, and indeed the extent to which governments in some countries are looking at putting in policies to try and attract labour. And I know it's a discussion point in Australia and Canada. So the immigration issue can cut both ways, but I don't know if anybody wants to say anything about it. Any takers?
I think so. Yeah, I think population growth more generally has been a huge kind of driver of the supply issues and the kind of housing shortages that we see around the country. You know, immigration forms part of that. I mean, in the UK, students make up a pretty big portion of immigration as well, and that has undoubtedly both contributed but also helped when it comes to increasing the supply of purpose-built student accommodation, which are included in the UK's kind of, or England's supply figures. So yeah, I mean, population growth is a big issue, and immigration obviously forms part of that. But as you say, that there are huge benefits to immigration from an economic standpoint as well. So I think you need to kind of balance the two.
And we know in the UK that the construction industry workforce is aging and really set to decline. So unless we can encourage younger people to want to do some of those jobs, some of the trade jobs, which, you know, are now relatively remunerative, but still not apparently as attractive as they need to be, you know, perhaps there is no option but to rely on overseas labour. But I don't know, or we, you know, just don't have the capacity to build on the scale we want. But Sandra, I think you wanted to say something as well here.
Yeah, so it's very similar to Oliver. So yeah, migration of course has a big impact on housing demand. So in the Netherlands over the last couple of years, more than 100,000 people or new inhabitants reached the Netherlands as well. So and especially, yeah, so a migrant immediately leads to more housing demand, right? If you compare it to population growth as a result of a newborn kid, it's not immediately new housing demand. It can simply stay at this family. So, and especially in 2022 in the Netherlands, more than 200,000 people came to the Netherlands as mainly as a result of the war in Ukraine. yeah, that's of course put a lot of pressure on housing demand. So yes, population growth is a main driver, and yeah, that is in the Netherlands mainly driven by migration. And of course, at the same time, we see that the average household size is getting smaller as well. So the population size is growing, but at the same time, yeah, the average house is declining, and that has to do as well with the aging population. So demographics play a role as well, that we have an increased number of single person households. So that pushes up demand.
That's an interesting point, which I think again is probably Europe-wide, that trend towards sort of single person households. Roman, I can't see you, so I don't know whether you did want to say anything about this question. Don't feel you have to. If not, I was going to ask you to start perhaps on another theme, which we haven't got much time left, but I did think we should just talk about sort of sustainability, just the energy saving, the improved quality of buildings that reflect, energy saving benefits and the costs of that. And I just wonder, the sort of premiums for properties that have that sort of quality of build. I mean, how's that coming through in Germany? Is there a differential, and is there the demand, the appetite to pay for buildings that have more sustainable features?
Yeah, there's definitely an appetite on the tenant side and also on the investor side, because most of the investors are linked to EPC ratings, A or A plus in their investment product, or they are looking for those kind of properties. And also the tenants, they are looking for to pay as less as possible service charges for heating, for gas, for electricity, and so on. So that's definitely a driver in the market. And but this also the increased the increased cost for building those kind of buildings was also an issue, so to say, to build more. And therefore, the German government has introduced a new building type E, so to say, as we say in Germany. And E means not expensive. E means einfach in German, or simple. So which allows developers to build less energy efficient as in the past, which leads to lowering the building costs to make newly built more attractive for developers, and also to pay less rents for those kind of buildings. So it's on the one hand we have investors who are looking for energy efficient buildings. On the other hand, it's very expensive to build those kind of buildings. So it's a kind of a conflict of interest, so to say, which we are facing.
I was interested in the point there, actually, that perhaps it's because Germany has had higher standards, but they're looking to have that sort of almost substandard. And I don't mean it in that way, but a lower standard that doesn't have all the bells and whistles, that's cheaper. While I suppose in the UK, we haven't really built to that in terms of sort of sustainability features to that standard. So in a way, I'm just wondering, I wonder in terms of the UK, whether it's almost a reverse situation.
Yeah, what we see in Germany is that we have a price difference on the multifamily segment from the worst EPC rating to the best EPC rating of 30%. That's what we are observing at our JNL analysis. We do this on a regular basis for the last 2 years, and so the 30% from the best to the worst is at the moment so the number we are observing. But I would expect that this number is increasing, or this number will increase because of the increase in building costs and refurbishment costs for to get those simple buildings and get renovated and bring this to the required standard.
Yeah, no, interesting. Look, I've only got a couple of minutes to go, so I'm just going to quickly run through, get some thoughts on this, and then one other question for David and Oliver as well. But Sander, I mean, in terms of Holland, Netherlands, I mean, is it similar sort of issues, or is there still a lot of pressure to get the sustainability criteria up, and how is it being paid for?
So one more time, your question: are we talking about the transition to make homes sustainable and the
Yeah.
dynamics there? Yeah. So I think one of the main motivators for homeowners to make their home sustainable is the whole business case, right? So to financially benefit from a reduction in energy bills. That is typically on the first place when conducting surveys, and on the second place is a better environment or better home comfort. So, and looking at that whole business case, we see often that the whole business case of renovating a home is not always positive. So often it does pay back when you insulate your home until a certain standard. But to make it to a very near zero, how do you call it, a climate neutral building, it's very costly. And also, if you look at the reduction on your monthly income, yeah, the payback time can be very low. So as said, the whole business case is the main driver. And since the business case is not always positive, yeah, it's not attractive for a homeowner to purchase an expensive installation of 10K and a heat pump for 10K, or while only experiencing a couple of 20 euros or 50 euros a month on your energy bill. So that is a main impediment.
Where's new build coming in? Is that at the top end of the criteria, or still across the board? Is it in terms of
new builds since I think since 2021 or since last year need to be net zero emission building. So they have one of the highest energy efficiency statuses.
Okay, thank you. Ingrid, any thoughts on Vienna on this one? I mean, are people sort of spending a lot of money to try and get their buildings up to scratch?
Yes, especially in the single household and in the housing on the countryside, it is an extremely high trend. It is a bit difficult in Vienna and in the urban areas, as you always need, you know, everybody in the house agree on those investments which need to be done. Currently, we also see that the investors are not fast on this process, as they really think so maybe there might come out some other changes, some other new developments, some other new subsidies, yeah, which might help and which might be just worth to wait for. This is a sad situation, so it would be better if our government would be clearer in its speech and in its planning. But yeah, well, we had elections last Sunday. Doesn't seem that it would get better now, unfortunately.
Okay, thank you. And just Oliver, just reflecting this from the UK perspective, and in terms of, you know, the sort of, I mean, both the retrofitting issue, which I sort of the OECD did a whole section of in its latest country survey, but also on the new build side. I mean, where are we on all of this?
Yeah, I mean, on the retrofit side, I completely agree with Sander on the business case part of it. You know, we have very inefficient housing stock in this country. A lot of it is quite old, and you know, the reality is it is still very expensive to retrofit your property to bring it up to standard. And the kind of, as Sander said, making that business case between the amount you're going to spend versus the kind of payback time on it is still quite long. I think what we'll see on the retrofit side is that it is going to be something which is going to be dictated by regulations. You've already had the UK government saying that in the rental market by 2030 you're not going to be able to let out your property unless it's EPC C or above. Now that creates its own problems in the sense that, you know, 63% of private rented properties in the UK are D or below. So there's a huge kind of bill coming for landlords to kind of get up to standard, and unless there's some form of government support to do that, it's going to be very difficult. Not to mention the challenges, as Simon, you said, in the labour market of just getting people to do that work anyway. So there's a huge kind of looming kind of or question mark over how sustainable and how possible that is, and ultimately you know, our view is that you're probably going to see it lead to a further reduction in terms of supply in the rental market. So you kind of have to think about the second round effects of a lot of that of introducing a lot of that regulation as well when it comes to that kind of retrofit story. Now, not to say that this shouldn't happen. I mean, undoubtedly, it's a really important process which has to happen, but it needs to be done collaboratively with the sector and with landlords in order for it to be a success. Otherwise, there's going to be a lot of kind of second round effects from it. From a new build perspective, new homes are undoubtedly a lot more efficient than existing ones, because there are building regulations in place which mean they have to meet certain criteria. But again, and I think Roman touched on it about what's going on in Germany and Berlin, but build costs are, you've seen double-digit rises over the last couple of years. They're coming in, but they're still rising. Financing costs are still high. Affordable housing is still a constraint on viability. Land costs aren't where they kind of need to be for everything to stack up. So, you tend to find that that developers are building to kind of meet regulations as opposed to kind of surpassing them. It's really interesting when you look at, and David mentioned new starts being down 40 or 50% in the UK over the last couple of years, but in Q2 last year we actually saw a huge spike in terms of new starts, because that was just before new building regulations came in around environmental regulations, and you saw a lot of developers just putting spades in ground so they could avoid having to kind of do that, which kind of just it just speaks to the fact that it is a really challenging environment for development at the moment, and all of these additional regulations on top of all of the kind of high cost of development is making it really difficult, and that ultimately is just leading to this supply crunch that we're kind of going through.
Yeah, none of this is cheering me up very much for the rest of the day, I have to tell you. Right, final question to David, just final thing. Now you can, I think we can do this one quite quickly, hopefully, but it's a question that came in. Should the Bank of England give interest-free loans to the construction sector? Will that get development going? And is it likely? Is it possible?
I think that's a tough one, and I think as soon as you start giving out interest-free loans to one group, every other group will be banging down your door. But I agree. I think on one hand you have the government whose mandate is growth, let's build houses, and then on the other hand you have the Bank of England saying, whoa, hold up, inflation's above where it needs to be. We want to increase interest rates to kind of to essentially slow down economic activity and slow things down. So I think there's an inherent tension there. I think my answer will probably be no.
Okay, well, thank you for that. And yeah, look, I think we're going to have to finish there because we've overrun, and I'm sure we could have talked for another hour. And I mean, this whole issue around sustainability, in particular in housing, is a fascinating one, because it's the industry, and in fact the sort of demand seems to be somewhere away from where the laudable goals are in terms of where we want to get to. So look, I'm going to sort of just finish off here. A big thank you to the 5 panelists. It's really been a really great conversation. And I also want to thank the audience. We've had lots of questions coming in, a lot of really thoughtful ideas, and just help to sort of facilitate the debate. We will be publishing a recording, we're publishing a written summary, I should say, of this conversation, and there will be in due course also a recording of the webinar online. And obviously we would like you to share either of those with your professional networks. And we also would like you at the end of the session to complete an online poll so we can get an idea of how you felt the webinar went and what else you would like to see in the future. On your slide now, you can see a list of forthcoming webinars. There's quite a few interesting ones. From my perspective, I'm particularly interested in the construction one because that will be drawing on our construction monitor. I won't be around for that one. I'm on leave, but it'll be a great conversation, I can assure you. I also want to, and perhaps particularly importantly, alert you to the RICS Global Sustainability Conference, very relevant in terms of what I just said and the end of that conversation. That's going to be on December the 5th, and this will provide an opportunity for a number of key stakeholders to discuss both the practices of the built international environment and also focus on some of the issues around delivering a sustainable future.